Hi everyone, and thanks for tuning in to another episode of Budget Investing. So today I'm going to do a super quick update on how things went for me in March as I hit some all-time highs, and then I'm going to jump into how to start investing on a really small budget or with basically no money, and how we can use that to build ourselves into retirement. So looking at my overall portfolio, I was able to end March at $12,439, which is an all-time high for myself and is really exciting considering the total global economy has been really shaky. So things are still looking up, a little bit down and up here and there, but overall I was able to move upwards. Now looking at my dividends for the month of March, I made $29.68. Comparing that to last year of only $20.07, that's a $9 increase over last year with really doing nothing different. I'm making more money and my money is working for me. And we're heading into April and I've already made $6.65, where last year I was at $33. So I have the rest of the month for dividends to come in and really help propel my portfolio forward and keep using those dividends to purchase additional stocks. Your first step in investing is, of course, deciding that you want to invest in yourself and your future. You want to start growing that money and you want to set yourself up to be financially free or have a nice nest egg for when you do retire. Or the other option, of course, is to grow this money so that you can use it to spend on things for today, like a trip or a house or whatever you want. But again, first step is deciding that you want to invest. Step number 2 is going to be finding yourself a broker with little or no fees. Now, the reason you want to do this is you want 100% of your money working for you. You don't want $5 a transaction or 10% of all transactions being taken away from you and given to this company when you have such a small budget as it is. You want every dollar to count towards your investments. So how do I find myself a cheap broker? Well, it's quite simple. Go on Google, do a little bit of research, find which broker works best for you. There are so many out there and each one offers a little bit of advantages in different regards, but at the end of the day, you just want to make sure that your fees are as low as possible. There's lots out there, as you can see from my quick Google search here, that there's $0 per trade. Now, that's fantastic. That means all of my money gets to go towards growing my portfolio. Now, number 3 is find yourself some cheap dividend stocks or total market ETFs. So I'll cover on the total market ETFs first. The reason for that is it gives you a huge amount of exposure to all of those different companies all around the world and all of those different sectors. Now, why would I want this? Simple. I have less risk this way. I'm getting a little bit of everything for my money, and most companies, when you're purchasing these total index stocks like VTI, like you see on the screen here, they allow me to buy fractional shares of it, so that way if I don't have the $228 US, I'm still able to get that exposure and purchase part of this ETF. Again, it really just want to diversify myself to make sure I'm not taking on unnecessary risk. Your other option is to use a lot of different stock screeners that are out there. Find stocks that are at least 2 billion in market cap. That way you know they're a large company and they're stable. You want to have a dividend yield of at least 0.25. I try not to go anything smaller than that, as it's really not kind of negligible at that point. And I want my dividends to be growing at least a 5% rate every single year. And you'll scroll down and you'll see that I have 632 different stocks to choose from. Go through, filter it down a little bit further by what you're looking for. When I say cheap stocks, I want to find companies that are something that I'm going to be able to purchase on a regular basis to start growing my portfolio. A couple of examples that I already hold in my portfolio that kind of follow along this line is Store Capital, TELUS up here in Canada, AQN, Stella-Jones, eARC, and CARS. All of these are under $50 per share, and it allows me to kind of purchase multiple shares in a shorter period of time so I can start to build my portfolio. And almost every single one of these pays a dividend of some capacity, so that when I do receive that dividend, I get to put that money back either into these particular stocks or towards a different stock of my choice. Step number 4 is track your portfolio. How are you supposed to know that you're actually using your money efficiently and effectively if you don't have the data and the analytics behind you? You don't have to make something quite as crazy and in-depth as what I've created in my portfolio tracker. But for me, these are all of the details that I want to know. It gives me all of that information at a quick snapshot to know, hey, what's going on? Why is this here? Why is that there? And I get to use these as clues to maybe deep dive and understand that maybe I need a little bit more information, or maybe something has happened that I wasn't aware about. This is just the overall portfolio tab that I have. I have a tab for learning. I have my overall portfolio, which just shows a very small overview. I have all of the different investments that I hold. I have a transactions tab, a dividends earning. I have a charts tracking tab that brings everything back over into the dashboard page into one quick view. But just find what works best for you. There's a million different ways to track it and a million different details that you could be tracking. But look into it. It will help you in the long run to understand if the money that you're putting in is actually working for you, or if it's actually costing you in the short term or even long term. Now, my fifth and final tip that I have for you is be consistent. Even if it's a couple of dollars here, a couple of dollars there, it all adds up, and in the long run, it's going to be worth a ton of money for you. Let's show you just a couple of examples here. So this is assuming you have $1,000 today and you only put in $20 a month. So this is gaining you roughly the market average of about 7% annually, and you're only getting a 2.7% dividend return. So these aren't crazy numbers. This is something that you could very easily expect. So again, you're only putting in $20 a month, nothing crazy. After 5 years, you're only going to have $3,000. I know that doesn't sound like a lot, but you also have to understand that you're only putting in $20. That's really not that bad. If you fast forward all the way to retirement, that does put you at just shy of $150,000. Again, not a crazy amount of money, but you would have made a lot of that just simply from the growth of your portfolio. Now let's assume every year that you add a little bit more money, and maybe starting in year 2, instead of $20, you bump that up to $50 a month because, life is afforded it, you've gotten a raise or whatnot, and so you move that forward, $50 forever going forward. Now all of a sudden you're at $276,000. That's pretty good. Now let's say at year 5 you bump that again one more time and you make it $75. These are big jumps that you could potentially be making, but over time hopefully you're making a little bit more money, you get more flexibility, and now you're almost at $360,000. That's pretty good. Let's just say 5 more years into the future, you jump it up again, make it $125 now because you're a little bit further into your career, you've been working for at least 10 years. And now can you see how it really starts to compound and it really adds up over time? And then let's just say 10 years, I just leave it like that for a really long time, and now I'm making a whole bunch of money. I bump it up to $250. Again, this is $250 every single month, and I'm at $500,000. That's pretty amazing. If you really want to make it a lot easier for you for getting all the way into your retirement, you can of course put more money in a lot sooner. And I could start it off right now today, and I can make it $100 every single month. Drag that down, and you can see that it jumps up to $566,000, and at no point did I increase my investing over all of those years. So that's fantastic news for someone like yourself and someone like me who don't have a lot of money. If I just stay with it, it really does compound super quickly. Hopefully those 5 simple tips were helpful for you to get yourself started as a budget investor. I know they work for me, and they're able to allow me to continue growing my money to get me to the point where I'm at today, where I'm making roughly $30 every month just from dividends, and I don't have to do anything for it. If you did like it, please don't forget to like and subscribe, and I will see you in the next video. Thanks so much for watching.